Guys, we'll be starting the session in next 1 minute. So good evening, everyone. Welcome to today's session of After Hours with William O'Neill India. And I hope everyone had a good day, as Nifty had a good day as well today. So before we go ahead, I would just like to give a small disclaimer that any security we'll be discussing in today's session should not be considered as a buy or sell recommendation and should be taken just for education purpose. Let's start with Nifty 50 action for the day. So today Nifty again had a gap up opening up around 60 to 70 points, and the day's open and the low was very close at around 17,899 kind of ratio, 17,900. And after that, Nifty continued to move higher. But after it moved higher, as you can see, it traded in a very narrow band for the remaining part of the trading day. And what's good is that after some consecutive falls in last week, Nifty managed to move ahead or move higher for three consecutive sessions. This was the third consecutive session that the Nifty managed to move higher, and Nifty ended the day in the top half of the day's range, which is a good sign. So talking about from the O'Neill perspective and how it's placed technically, let's talk about on that front first. And on the O'Neill front, the distribution day count still remains at one, which is a really good sign, which takes it to the that the Nifty continues to remain in confirmed uptrend, which is really good. And on the technical front or from the moving averages and key supports and resistance, if you look at it, Nifty managed to in this session close above it's the 21 DMA and the 10 EMA, and from there is able to move higher, which is a really good sign. But as you can see, last time around 17,900 or the 18,000 level, it found some repulsion. And similarly, if we go back as well, around the 18,100 level also it found some repulsion. So probably there is some overhead supply at these levels, and Nifty can find some kind of resistance around these levels. So we are very close to those levels now, around 17,930. So in the coming few days, let's see how Nifty behaves. And going down the month, if you look at it, some major, some central banks across the globe are on the hiking spree. Even the ECB, the European Central Bank, did after keeping rates stagnant for around a decade or so, they had raised it last time at around 25 50 bips, and this time by like a huge mammoth of around 75 bips. So overall, the inflationary scenario in Europe is very bad, and they had to do it. And similarly, even your US central bank has also been hiking interest rates by around 50 to 70 bips. And if we look at the CME Fed Watch tool for this month meeting, which I guess is around 15 September, again a 75 bips rate hike is getting priced in into the US Fed Fund futures. So probably it's going to be an eventful month, and let's see how Nifty behaves with all this macro data, global macro data coming in. Talking about the top gainers and losers for the day, Adani Ports was the top gainer at around 3.8%, followed by Titan by 2.5%, TechM by 2.2%, Devi Slab by 2.1%, and Axis Bank by 2%. On the other front, if you look at it, the major loser from Nifty was the Coal India, around 2.5%. Shree Cement, after gaining consecutively for last couple of sessions, three sessions, have declined by around 1.5%, found some profit booking in Shree Cement. The other losers were Nestle India, HDFC, and HDFC Bank. Talking about the sector view, As you can see, the advancements was across sectors and not even one sector is closed in the red. Across the sectors, you can see all the sectors moved higher or inched higher. The major movement or the major gainers were your Nifty Media by around 2%, Nifty, sorry, Nifty IT by around 1.4%, Nifty PSU Bank by 1.2%, and Nifty Metals by around 0.9%. So talking about the key news on first on the macro front, the UK economy grew by around 0.2% in July. Just the month on month, not the YOY, if you talk about it. So there is contraction on the YOY front versus the estimate of 0.3%. Even compared to the estimate, UK economy grew at a slower pace. So RK forged to issue up to 46 lakh convertible warrants at 205 each on preferential basis to promote public category. On the HDFC Bank partners with National E-Governance Service to develop e-bank guarantee banks to mitigate e-bank guarantees to deliver quick digital and paperless service. On the pharma front, Zydus Life receives USD approval and 180 days of shared exclusivity for creprazine capsules. The capsules are used to treat depression. So the Bharati Airtel, that's the Nxtra partners with Bloom Energy for fuel cell installation at its data center in Karnataka. So now let's come to chart of the day, and the chart of the day for us for today is Rhi Magnestia. It's a refractory company, and before we go ahead with it, would like to give a small disclaimer that it's not a buy or sell recommendation, and just we're doing it for educational purpose. Before we go ahead with discussing about the company, I mean, I'd like to give some small pointers about the what are refractories and why refractories are so important. So refractories are majorly used or across your steel, cement, glass, aluminium, and copper. So if one wants to probably manufacture a ton of steel, it demands around 10 to 15 kgs of refractory. Similarly, with cement, one ton of cement requires 1 kg of refractory. Glass, 1 kg of glass requires 4 kgs of refractory. So it's highly important. And if we talk about, I mean, main revenue driver for the industry and for this company as well, 70% of the revenue is driven by the steel sector. The next is the cement and lime, which is around 10% of the revenue. Glass is around 10%. But what's more important is that without refractories, these industries or the manufacturing process in these industries cannot go ahead. And it's a critical component as an input cost for these companies, and the cost that goes into, I mean, for these companies is also very low. So if a steel company wants these refractories, the cost they're incurring on the basis of the top line is just around 0.3%. And if we talk about cements on 0.5%, the others are 0.2%. So aware. So these are the kind of industries one should look at where it's a critical component for some other user, but the overall cost component to the top line should be very low. So I hope I made my point clear. And talking about the company, it's a leading refractory manufacturer, and the merger with RHI uh, is expected to be is going very highly value accretive due to synergy from diverse product portfolio and a wider customer reach across your mini mills, PSUs, and private steel banks. So the focus for the company is on full line of products, import substitution at the Cuttack plant, and making India entitles the manufacturing and R&D hub for Asia and African market, which is expected to accelerate the revenue growth for the company. And as you can see, for the last 7 to 8 quarters, let me just chart on it. You see the last 7 to 8 quarters for the company, it's been growing tremendously. Talk about the EPS front or the sales front, it's been growing high double digits and high triple digits as well. The number of fund holding in the stock has been also increasing, so which is a really good sign. If you look at it, last 4 quarters back, number of funds that were holding the stock was around 43. Now it's around 80, which is a really good sign. And going forward as well, if you look at the consensus estimates as well, for 24, if you look at it, it's expected to grow around by 20%, the EPS number. So, which is a really good sign. And now coming back to the O'Neill front and to the ratings, if you look at the master score, the EPS ratings and everything, all of this checks the boxes. The master score is very good at 78. If you talk about the last 6 to 7 quarters of results, that takes your EPS rating as well. So price strength is also very good at 78. Your AD ranking or the accumulation distribution ranking is also very good at A minus. What's positive is that the stock is forming a stage 3 cup base, and if you look at the right hand side of the base, your RS line is trending higher, so which is a really good sign, and that's what we want to look at it in any technical base formation. Along with that, you can see big blue bars happening on the right hand side of the base. So when you can see probably when the stock was falling in this phase, you could see volumes dried up. So talking about the first from the sector front, then to the company front, and to the technical front, it's probably ticking all the boxes. The only point up till now is that that's left for the company is like the pivots at around 674, I guess. Yeah, 674 is the pivot, and the stock is around 6% to the pivot. So one can easily keep this stock in their watch list, and if the stock is able to provide a breakout on above average volumes, then probably one can easily have a look at the stock. So that's it, and thank you from my side, and please stay tuned to our morning and evening space, that is the pre-bell space and the after hours space at 8:45 in the morning and 4:30 in the evening. So thank you guys, and hope you found this session informative.